Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, three charts, and three trades. Rick Ducat will take us through the charts, and here to take us through the trades is Mike Shorr, Director of Trading Education, Prosper Trading Academy. It's great to see both of you. Mike, I want to start out with a big picture take from you on the market. We had those records to close out last week. We've got a pullback today. Does it make sense to you?
Yes, and it actually makes me pretty happy. You know, whenever you get a market that goes straight up, straight down, it's just not healthy. So, you know, I continue to be in this buy the dip type of scenario. And like I said, I think it's a good thing. It makes sense why we pulled off of the highs, given geopolitical and tariff stuff. But I think that that's ultimately healthy.
Okay, so talk to us about the first trade on your list. You've got Builders FirstSource on your list. It's underperformed the S&P 500 year to date. Are you bullish or bearish on this?
So this is I'm bullish on this. I'm looking for a run up to that 200-day moving average. I need us to break out and take out those highs at 129.31 though. So you know, I'm letting the market do kind of the heavy lifting. If it doesn't, if we don't get those type of rebounds and push-ups, then you know it's just a no trade for me.
Okay, all right. So Rick, take us through what you're paying attention to when it comes to this chart.
One of the first things that stands out about this chart is that we formed what looks like it could be a fairly significant lower area. So if you were to backtrack a little bit, you can see that price was trending down here, here, after failing to take out those old highs near 203. After this decline now, we can see that price seems to have found a floor near the 106 level, our green line here. But notice at the same time, though, that even during this period as well, price was making lower closes. From here, it sort of stabilized. We saw bullish divergence on the RSI, a very steady uptrend in this momentum indicator. Now we are seeing price break above this repeated ceiling here near 123, also a floor previously as well. Old support becomes new resistance. Now we are brushing up against this trend line that we mentioned previously, starting near those highs. So if we were to break out above that level around that 130 point or so that Mike was describing, the next stop could be that 137 area that we mentioned that represents an old gap, a low point, another low point, and then a breakdown, and then resistance point here. Lines up fairly closely with our purple 252-day exponential moving average that comes in above 140. If we were to look at our other studies here, volume profile and standard deviation channels, we can see that our volume profile study shows the point of control is down at these lower levels. So we're seeing very heavy trading at what looks like it could be a notable low point. We also have a confluence of two of our moving averages coming together right around that same level. So 119 looks like a key supportive area. Breakout point would be 130 and then 137.
So, Mike, I'm going to send it back to you. Given those levels that Rick pointed out to pay attention to, tell us more about your trade for this one.
Yeah, so I'm just looking. You know, this is a breakout. If we break out, we should expect it to move quickly. So I'm going to go with a little bit shorter time frame here, just out to the 18th, regular July. And I'm looking at the 135, 140 call spread. If we get up there, that thing should be trading about 110, which means that we're risking 110 to make potentially 390, and that puts us at 3.35 to 1 reward to risk. We got to take out new highs to get out of that, though.
Okay, you have to take out new highs to get to that. All right, so Mike, let's move on to the next trade on your list. You've got DoorDash on your list. It has outperformed the S&P 500 year to date. It has outperformed it on a year-over-year basis. What's next? What's your view?
Yeah, so actually, DoorDash is breaking out, and so I was looking for an entry this morning at 236 and change, 236.22. We're trading 242.63. So I didn't get that. We got the breakout that we're looking for, and then I'm looking for us to at least target that nice round 250 number, which is a little bit higher than 52-week highs.
Okay, Rick, the floor is yours. What do you notice about the chart for DoorDash?
Yes, so for this one, we saw a notable pullback down here to our purple 250 two-day exponential moving average right around 160. But the bounce off of that has come pretty quickly here. Earnings also, after an initial gap downward, seems to have been a catalyst to the upside. We can see this 215 level, those old highs at that green line came back into focus here after the breakout point. For the most part, price held on to that support area. Now we can see prices well above our moving averages that we follow. Yellow 21-day, orange 63-day, purple 252-day exponential moving averages, all of which are continuing for now to diverge farther apart from each other, which suggests the trend is still continuing to the upside. Look for that slope to start to change, or for the trajectory of those lines to start to flatten out a little bit for signs of slowdown. We can see that RSI is in right on the money, basically, with our upward sloping trend line here in green, just a hair below that overbought area once again here. So what the bulls would want to see would be for RSI to re-enter the overbought area and to make new relative highs above its previous peak, and for price to pretty much do the same thing. So we could draw a channel here. We could start with this low point here, go across these lows, duplicate it, put it across these highs. That is about where we topped out recently, near 249. That would be another similar boundary to potentially watch going forward. So if we were to consider volume and standard deviation channels, while there is some trading right around here at these levels, traders may be establishing a foothold near that 240 level. To the downside further, volume starts to pick up once again near 220. 215 was that old high that we mentioned previously that we held on to. So 215 to 220 looks like it could be another supportive area. Our volume profile point of control all the way down here near about 190 or so. If we did keep moving higher, 258 plus one standard deviation channel, one standard deviation above our blue linear regression line, our fair value line, could be further resistance there just below 259.
Okay, interesting. All right, so Mike, tell us a little bit more about your trade, especially given the levels you were originally looking for.
Yeah, so like I said, we already broke out over my level of 236.22. But I was looking at, give us a little bit more time, July 25th, 245, 250 call spread. If we got to that 36.22 level again, that should be trading about $1.60. So we can make 340, we can lose $1.60. That's 2.13 to 1.
Okay, all right, let's talk about the last one on your list. It's in the social media world. It's Reddit, so a younger company here. So far this year, it has underperformed the S&P 500, but if you look at it on a longer-term basis, it has outperformed on a year-over-year basis. So what's your view on where it goes from here?
Yeah, so this is another one on the breakout, kind of, a little bit undervalued when you look at it on a longer time frame, but we are above all of the major moving averages. We've had a nice move up here. The problem is, the pullback buy is for me is all the way back down at 136. So either it's a no trade, or I'm looking at the breakout here, and that breakout would be at 165.55. Obviously, we're about $13-14 below that right now, so we need to see that go. And that's the way that when we get these kind of trending markets like this, either you're looking for support, or you have to let the market do the heavy lifting for you and take that breakout.
Okay, so that 165.55 level, I think that's the number that you said that you're looking for. So Rick, take us through then the technicals on this chart for Reddit.
Yeah, so this one looking like it's perhaps staging a bit of a breakout to the upside here. You could draw this white trend line going across the lows, duplicate it, put it across these highs. For now, price has pushed above it and is staying above that level. Moving averages diverging farther apart from each other, price above all of them. But 159 stands out as well. Take a look back here, an old high point, a repeated floor once again, then a breakdown. So now that's about where the bulls are stuck once again. So this level 159, 160 will be key to overcome. If we were to move beyond that, 181 also stands out, our pink line here, because it was the corresponding ceiling to this old floor that price found here. So we had this range-bound area. We re-entered it briefly, but never really tested those highs again. And now that's kind of where we find ourselves with this potential resistance zone to consider. So if we were to look a bit to the downside as well, our green line here, a ceiling several times here during our low point for our price activity, 125, looks like it could be another downside area traders may have their eye on. RSI giving up a bit of its ground here, falling below not only the overbought area, but also this shorter term green trend line here after only just recently breaking this very long term downward sloping red trend line. So a bit of an interruption here, not necessarily an impending collapse, but something to take note of. So we can see though that our volume profile point of control, our heavy trading area, comes in here right around 113, lines up with our long-term purple 250 two-day exponential moving average, as well as our -1 standard deviation channel and our shorter term trend line. So that area could be quite another confluence of factors to consider there, around 113 or so. To the upside, volume picks up once again here near that 160 point, and then our boundary that we discussed, 181, that would be the next step.
Okay, all right. So, Mike, I'm going to yield the floor back to you to tell us a little bit more about your trade, especially in the context of the things that Rick just pointed out when it comes to that chart and some of the levels he was looking at to the downside.
Yeah, well, this is a bullish play, and I'm looking at that same level, excuse me, that same level of 181. So I'm doing the 170, 180 call spread again for July 25th. Few weeks in there, 70-80 call spread, buy it for 250. So 250, we can make 750. That is 3-to-1 reward to risk.
All right.
But we need to take out those highs at 165.55.
Okay, that just stuck out to me that you mentioned the 155 level, and then some of the levels that Rick pointed out that doesn't. It just seems like it's a cautionary point to pay attention to there. All right, we'll leave it there. That's Mike Shorr, Prosper Trading Academy, and our very own Rick Ducat, lead and market technician here on Schwab Network. Thank you both.